Hi guys, Will here from WB Trading, and in this video I want to show you how to build your own trade record, and I'm actually going to give you a pre-built template as a helping hand as well. Now to begin with, we're here inside our Platinum program, okay, and I just want to, if I nip down to the bottom, down to the Trader Development Resources section. Now for anybody who's watching this who is already a client, who's already working with me and my team, you can log into your account, come into the program, and you'll find the trade record. And if I just open this up, right, perfect, there we go. So here is the blank template inside the program for you. Let me just zoom in. And first and foremost, let's cover what's actually on this sheet. Now, to begin with, of course, the date that you've taken a trade, the market that you've taken the trade on, the time that you've actually taken the trade, the action, so is it a buy or a sell? Is it long or short? From there, of course, the price that you've actually executed at, your exposure to the market, so is that 0.5% of your account, 1% of your account? Very important to ideally keep this static, so maintain a consistent level of risk. Second to that, the position size, and then the same for the exit. So the date that you exited the trade, the time that you exited the trade. Again, if you bought the market, then you're going to be selling the market when you exit. The price that you've exited at, and for me, how many days have I held the trade? Now, I think I first built this back when I just swing traded, actually. But there you go, the days that you've held the trade as well. The results, so the points or pips of profit that you've actually achieved, the R that you've achieved, the profit in pound terms, dollar terms, whatever currency you work in, euros even, and again, risk, and also a dividend if you have been charged one. So for most of you, if you're trading stock indexes, currencies, you could even put, if you are holding overnight, you could put your holding fee in here. So you could change that to the holding fee that you've been charged for the time that you've held the trade, so that you can stay on top of that. And I think that's a good place to dive in really to the reason behind a trade record, which is just being able to zoom out and understand the actions that you're trading, the yield that you're producing, the risk that you're taking, even things right down to, again, the dividends that you're paying on the positions that you're holding, the charges that you're actually incurring for trading. I mean, this is another thing that a lot of traders overlook, but when it comes to trading professionally, full-time, really, you're running a business, aren't you? So it's no longer, I mean, I know that the vast majority of traders out there, it's not a career yet, and maybe it's a bit of a kind of a side hustle. It's not, it's not make or break career, pay the mortgage, pay the bills, feed the family stuff yet. But that is where a lot of people want to get to, isn't it? So when you are working towards getting there, things like a trade record and filling it out properly, reviewing it regularly, those kinds of things, it's very important to track this stuff, monitor this stuff, stay on top of this stuff. And just to give you an example, I mean, if we take, I think my favorite analogy for describing this is always health. So let's say you were wanting to run a marathon. If that was the case, then you would be tracking your exercise, probably tracking your steps, your calories, optimizing things, should I wear these running shoes? Should I, blah, blah, blah. You're optimizing and you're tracking everything that you're doing, how much sleep you're getting, the exact food that you're eating. And trading's no different, right? It's really important that we track, again, everything that we're doing. So when we're exiting, what markets we're trading and why, the time, the price, the exposure, any holding fees or dividends that we're paying. Because then what we can do is we can zoom out. Let's say we do this every month, every quarter. We can then zoom out, okay, and take a look at things. Am I varying my risk? And if I am, what impact is that having on the yield that I'm actually producing here? Am I on a winning run? Am I on a losing run compared to, last January, last Q2, so on and so forth? Am I exiting well? Am I skipping trades? And this is the reason for this box over here as well. So explain the reasoning for execution. This could even be, you could have another one here, so if I just copy this over even, you could have explain reasoning for exiting, for example. And this, I mean, this is very much like me. If you know me as a person, as a trader, even as an entrepreneur, I like to track everything, know everything, just stay on top of everything, really. So that I can monitor the system as a whole. Really, I mean, the way that I think, and this is not gonna surprise you, but the way that my mind thinks is in systems and is in data and numbers. So it's always been very important for me to track everything, you know, diet, just everything. I won't bore you with the details. But again, coming back to building your own trade record. Now, I'm going to put a link to this sheet here in the description for you. So if you like, you can download this and use it. That's completely free. A bit of additional value for you there. Or you could even come here and change things. So let's say you only day trade, you never hold overnight. Well, you could delete the dividends tab. You could even change that to the spread, for example, if you really want to go micro detail here. You can take things off, add things on, depending on your preference, how you trade, how often you trade. So go into the description below the video, grab this, get it downloaded, get it onto your computer, into your trading folder if you have one, and yeah, start updating this. Add all of your trades on a daily basis. Make sure that this is all filled out properly in detail. And then what I would suggest is reviewing it, I would say either every 2 weeks or every 4 weeks, depending on your style of trading. I mean, if you're scalping, that is going to be very different to if you're position trading. You know, if you're position trading, you should perhaps review every quarter, if not every other quarter. If you are scalping, obviously much more frequently than that. So it's going to fall in line with your style of trading. Anyway, only a short, pretty quick fire video for you today. I just wanted to get this to you because I know how much value this sheet is going to add. So yeah, I wanted to get that to you, again, completely free. The link is in the description. Make sure you grab that. And yeah, any questions, any thoughts, or if you'd like to say thank you even, hit the comments section below the video. And as always, I'd really love to hear from you, that's for sure. That aside, if you do want to know more about how I trade, if you'd like to get in touch, maybe even learn my strategies, I'll pop some links in the description for you. You can have a click around, maybe even book a call in with me if you'd like to jump on a call with me and talk more about working with me and my team. But that aside, thanks as always for tuning in. Really great to have you on the channel. And yeah, I'll see you back here soon. Bye for now.